Morning, everybody, and welcome. It's TheoTRADE Chat. We're back for another fun-filled day here. It's Thursday, March 14th, 2024. SPOs are up they're up 5 handles right now, barely holding on to what were some fairly significant overnight gains. Finally, maybe we're reacting to the fact that inflation is apparently not going away. We'll talk about that a bit after the cash open. Let's just key into right now what I think matters the most, and that is not just so much the S&Ps or the NASDAQ futures right now, but there's significant movement in the bond market once again. Bonds are getting trend-worthy. So this is 3 sessions back-to-back. We've actually seen some sell-side activity in the bond market. The bonds obviously reacting to what has been rather inflationary environment, shall we call? Inflation. It refuses to die. So one of the things that we can't do right now, you can't look at the S&Ps and kind of figure out volume other than the roll is underway, right? So when I say the roll is underway, we're still rolling from March to June, but there's one thing that's really, really notable in here. And I say I can't figure out the volume, but here's the bottom line. The volume is incredibly light, even with the roll. There's like maybe 200,000 contracts that have actually traded in here. It's super light. But in big time contrast, take a look at the ZB. ZB's rocking. It's 161,000 contracts. The ZN is clear up to like 920,000 contracts. It's the pre-market. And this is something I'd pay attention to because, again, coming into a triple witching, no, bonds are not rolling over, but in the triple witching, and when you really can't read the volume in the S&Ps, the bonds are actually telling a little bit of a different story. So there is a little bit of angst, if you will, in terms of trade. What's so strange, though, this morning is the rotation game is just fully underway. You can literally see trade coming out of Nvidia and back into stuff like Microsoft. They're rotating right now. Rotate! Keep it moving higher at any cost. So market cap is actually flowing this morning from Nvidia. We'll see what happens, okay, as we open. There's nowhere to go. You can't run to bonds. They're starting to buy dollar again. Okay, nobody likes the dollar. Well, not for the last couple of weeks. They're starting to buy dollar. It's getting funky out there. It's really funky out there. Volatility is relatively flat this morning, but you'd be remiss not to say this. You notice that volatility, okay, that's trending to the upside with the S&Ps exploding higher. So yeah, again, everything you look at on the screen, and I've been saying this the last couple of days, everything you're looking at on the screen, there's just all kinds of wrong going on. So we're going to come into a cash open. We're listlessly higher this morning. And what is driving us higher is unequivocally Microsoft. You do have the financials playing a little bit of role to the upside. I mean, nominal. The energy sector this morning also has a very, very mild bid. Wouldn't read too deeply into this. You're basically seeing 1, maybe 2 stocks that are bid, causing a lift in both NASDAQ and S&Ps. To be short-lived if these bonds continue to sell off. So as we come into the cash open, I think check your baggage at the door. This triple witching volatility is starting to kind of come to fruition. Let's take it over to advanced decline line at the bell. Oh, yes, the infamous 50-50 advanced decline line, the hallmark of all good rotations. As I was saying a moment ago, take a look right out of the gate. Microsoft, wild bid. Look, that actually caught me off guard. The ticks are negative this morning. Prognosis negative. So the ticks are negative. You got a little bit of a bid still under markets, but Microsoft clearly the Lita in here. Meta, I wouldn't read too deeply into this. It was only seconds before the cash open here, like literally the last 4 minutes before the cash open, that Meta did anything. So maybe it actually barfs back $3 because Meta was trading literally 4 minutes ago at 495, opened at 500. There's a little bit of a bid in there. But again, I'm much more amused, if you will, by Microsoft this morning, and I'm going to tell you exactly why. What else you got? What else do you have? Okay, we look like right now we're starting to rotate away from Nvidia. Nvidia, look, it's a mild start. It's down 1.5%, but they're selling Nvidia and rotating into everything else. That works until it doesn't. Okay, and what I mean by that, and I know that sounds like a ridiculous comment, that works until it doesn't. What I mean by that, okay, is simply the rotations will persist, okay, until they just all of a sudden just drop out and you go into a heavily correlated market. It's uh, it's of no matter right now, and I know that people really get into advanced decline line. Okay, people get very frustrated when I say stuff like that. Advanced decline line is absolutely unequivocally worthless. And it really is, in my opinion. This advanced decline line is useless right now in light of what you're actually seeing in here. Okay, and we have been waiting rather patiently for it's almost 3 weeks now of looking for the correlations to start to kick in. You've seen brief and fleeting moments of it. Okay, markets though, they don't change. Okay, until this advanced decline line starts to go into higher degrees of correlation. Okay, and again, this is true of really all the trades that you're seeing right now. By the way, look at this, a little bit of a bid back. By the way, a bid back under Nvidia, all right, simply means you probably see sell side activity in the other, okay, in the other tech stocks. And I cannot stress enough, when it comes to trading, the advanced decline line obviously is important, but that's going to be down the road. The only thing, again, worth noting in here, and I keep going back to the AD line because all you're seeing is us basically rocking the boat one way, pulling back the other way. All right. Market cap, though, is just being distributed. And as I say this, there's just nowhere for money to go. Okay. As strange as that may sound, like the retail world never fully understands this. If you are on the professional side of trade, you can't go to cash. Everybody always is like, oh, I'm going to go cash. You can go to cash. They can't. There's too much cash. I'm sorry. You can't take $1 billion and go, excuse me, JP Morgan, can you hold this for me? Okay. They don't take $1 billion plus deposits. So you always have to go from one asset class to another. Okay. And that asset rotation game right now, what I don't have on the screen is, yeah, people are actually moving to shorter term like notes and so forth. And I totally get it. Those are less volatile, but these bonds and these notes, they are indicative, okay, of rotations. And right now, okay, so where are you going to go? So we are selling bonds and we're selling notes. And if we start to sell, the S&Ps and so forth, it's going to get scary in a hurry. There's another major, I think, structural issue right now in markets. And that has to do with there is a constant need, okay, to want to sell SPX options in here. And holy crap, has this volatility, okay, been suppressed. When I say that volatility is suppressed, I'm implying that this implied volatility right in here, the short-term stuff, is incredibly low. Okay. We all know that trading firms are selling short-term volatility and they're doing it. Okay. So they're selling vol. And when I say selling vol, look, they're just selling naked options, pure and simple. Like, don't make it any more difficult than it has to be. And they're selling it, okay, doesn't matter, like at any price. That's trading firms. Do not confuse, by the way, trading firms with market making firms. So they're selling a huge amount of volatility in here, and they're taking the capital and they're shoving it back, okay, into some of the equity products, and they're buying options at equity products, and it's causing a little bit of an issue right now. First of all, everybody in the streets talking about it, but it's causing a little bit of an issue as it's showing up now, even in commodity products. So this like volatility trade where everybody's coming in and kind of suppressing volatility, the issue therein lies is volatility goes from one extreme to the other. So it's a highly suppressed volatility trade. Okay. the trade that's being done though with that capital, meaning that they're selling premium and turning around doing stuff like buying Nvidia calls. Okay, I actually had a buddy that told me that they were trading Tesla puts. Okay, meaning that they were literally buying puts in Tesla. Okay, and buying calls in Nvidia with the capital. I don't see any kind of echoes of that going on today inside of Tesla. Nvidia, just to get a quick glance, there's no order flow like in Nvidia. This is dead. 61,000 contracts, 6 minutes into the trading session is dead in here. Okay, but we'll kind of be on the lookout for it. In any regard, it's also very evident that what trading firms are doing is they're going into at each trading session. It's the school of what works right this second. So I haven't looked at Microsoft just yet, but I'm going to tell you right now, before I even open this option statistics, okay, it's very likely some calls are being bought in here because, as I said, it's big rotation, okay, and there they are. Look at this. They're buying almost twice as number of calls that they're selling, okay. I mean, there's no activity in the puts whatsoever. This is just call buying that's actually pushing the stock higher. So the day that Nvidia doesn't work, okay, which it's not, they'll turn around and the trade will actually move towards Microsoft. The interesting aspect in here is there's not like fierce sell side activity in Nvidia. Okay, there's just nobody trying to prop it up with calls at this point. So what does it do? It falls back mildly at this point in time, but that definitely leaves some risk on the table as this day kind of continues. And I do not mean risk to the downside. Your risk right now is you can see the S&P is kind of ramping back up here a little bit. Your risk right now is they come rushing back into a product like Nvidia, start buying calls in here, which is exactly what you're seeing right now. And the stock is jumping. Like literally, I just saw 2,000 calls trade through Nvidia in the last 30 seconds or so. So it's getting a little bit more heated in markets. That's shockingly fast. Okay, that move that just transpired in there. In any regard, again, the rotations, okay, kind of continue from sector to sector, stock to stock. Okay, all the capital is predominantly coming from selling implied volatility in the major index products. Today, I would think that the bond market would play a little bit more of a vital role because that's some real selling. The bonds are actually down almost 1 point. The notes are almost off by about a half a point. And by the way, the notes moving a half a point. It's a decent sized move. Clearly, you can see that on the screen. It's a decent sized move. But what's even more impressive is some of the volume this morning. So there's huge activity in the bond market. Obviously, there was a lot of data that came out. Speaking of data, okay, for those of you that were like tuned in this morning, I'll just zoom in. There was absolutely no volume whatsoever. S&Ps at this point, they were up anywhere from 15 to 17. Okay, so the S&Ps are kind of riding high this morning. The data that came out, okay, was PPI. Okay, in addition to it, retail sales. PPI was what I would construe as a rather hot print. It was 1.6%. Okay, the estimate out there was 1.2%. So again, that's the estimate. So it crushed the estimate. On the flip side of it, the retail sales number, okay, actually fell. Retail sales was 0.6%. The estimate was for 0.8%. That's supposed to be an 8. Okay, so what we have, inflation continues with falling retail sales. Not exactly a lovely picture. The interesting aspect of that is how the market reacted nominally, just absolutely nominally. Didn't react at all, of course, to a high CPI number earlier this week as well. In fact, if anything, okay, your CPI number sparked a significant rally, which still has everybody on the street kind of shaking their heads. It's because right now, all right, one of the most important things that you can garner from this marketplace, okay, and it's something I've been talking about for months. We picked up on this all the way back in December, is that it's no longer about so much economic data. It's not even about the Fed. No one gives a damn. Okay. It's about a trade, right? And it's an incredibly crowded trade. And that's why I keep saying, like, look, everything in here in this trade keeps going until it just stops cold. and we're a hell of a lot closer, okay, to stopping cold than we were even 2 weeks ago. I've been talking about for 3 weeks. We're on an Nvidia watch. Obviously, that's still completely in play. And every single day, you just hear these ridiculous calls. Nvidia, I saw something ridiculous like Nvidia be 3 times its price like a year or two from now. It's fine. Okay, let all of that happen. I just think it's amazing to me that more people don't explore the fact that this is a dispersion trade, okay, and why the whole street isn't talking about that. Do we really think that, yeah, man, I'm going to go out there and buy that at $900 a share? Do they really think that mom and pop sitting at home on a Thinkorswim platform are buying stocks at $900 a share? Okay, I think it's just all kinds of chaos. Anyway, okay, the point being in here is Nvidia is obviously right at the epicenter of this trade. Microsoft though ain't far behind. And Microsoft, and again, a little give it a little respect over here. It's a nice break to the upside. Speaking of which, I've actually got I've got the Microsoft trade on. Microsoft's up, my trade's up about 40% in there. It's a catapult. Well, it's working at least for right now. We'll see how that kind of plays out. But Microsoft did have to be quite a bit higher for that trade to fully kind of break out. Nevertheless, okay. So there's again a bit of a rotation going on. That's the trade today, okay, which is still all right holding markets a little bit higher. Now, as I say, often like looking down the list, some of the usual suspects, there is some really unusual trade in here today, and that's this. The dollar is up. You're like, okay, that's not unusual. Yeah, the dollar is up, so is oil. Most of the commodity products don't necessarily have like positive reactions when the dollar is up. The dollar's not exactly flying. It's up some, 23 cents. But the dollar's up. It's putting a little bit of pressure into gold. And I'm watching some of the commodities as well right now, because the commodities, I mean, is this what you would expect in an inflationary environment? Okay, I mean, everything that transpired earlier this week, okay, has, and again, if you're kind of in this business a while, you look at stuff and you're like, holy crap, that's the exact opposite. You realize that earlier this week, CPI comes out, CPI is hot. What happened? Gold sells off. The exact opposite of what you would have anticipated. So again, it's a little bit of buy the rumor, maybe sell the news. You don't have to come up with anything beyond that. Kind of talk yourself, crazy, because the whole street's talking about, the fact that gold has been bid. I'll tell you why gold's been bid. Probably sees inflation is going to get hot. It probably also sees the Fed. Fed's not going to lower rates. Okay, how can you lower rates when inflation is actually making a little bit of a comeback? That is going to be, the talk of the town. But the inflation, okay, and the Fed, in my opinion, just doesn't really make a difference right now. Okay, markets are just continue to go right on. But I'm going to tell you something, and you can take this for what it's worth. Eventually, you're going to get some wild down days. Okay, recently, almost every week, we've seen some of these wild down days, and volatility is kind of testing us a little bit. In okay, the last few weeks, you've actually seen a wicked trading session last week. We had a huge reversal as well late last week. Okay, there's been some fairly wild trading sessions. The resolve has been higher. Again, some fairly wild trading sessions in some of the recent trade. I think we're actually due for just that. I don't know what tomorrow holds because triple witching is coming. Okay, but keep your hands and feet inside of the vehicle today, because and the reason I'm bringing this to light again, I'll reiterate, this week holds an $82 expected move, but today's expected move is basically $30. You're looking for a $30 move today. You haven't moved really at all. So again, you have to sit tight and wait for that price action. By the way, all the commodity products have actually been rocking to the upside right now. And I'll tell you something also interesting about some of the commodity products. Okay. I have a buddy that actually trades still heavy in commodities. He's telling me the same type of trade that's going on in the SPX, where they're selling SPX volatility. Okay. There's a similar trade that has actually been seen inside of the commodity products as well. Nevertheless, okay, I would say that my biggest concern at a point like now, you look, by the way, commodities, we can pull up all kinds of stuff. Corn, okay? Pull up corn. I know it doesn't look like much. This is a contract adjustment, but it's a wild bid back under that marketplace. You can look at a lot of commodity products and you're going to see something similar. And that is, okay, everywhere you look, inflation's making a comeback. Speaking of inflation making a comeback, there was just a significant drop inside the futures markets. It looks like it was, well, in part, in large part, it's right here. It's heavy, heavy trade right now in Nvidia. Okay, that's what's going to be worth keeping an eye on. That was heavy enough that, check this out, a 2% move in Nvidia. Okay, right now, okay, you're seeing almost a 2% move up in Microsoft. It's almost a perfect 1-for-1 in here. We're barely holding it together right now in the Nasdaq. Okay, this might be a day where Nvidia starts to get a little bit more wild. We'll see how that actually plays. Again, you know, when it comes to Nvidia on a day-to-day basis, I know people want me to come in here and like handicap every single move of Nvidia, but I'm going to tell you right now, order flow, okay, in Nvidia is just dictated by algorithms, and they ain't no rhyme, no reason. The only thing I can tell you is that when order flow does shift in here and you start seeing people buying puts, okay, and algorithms buying puts, that's when crap's going to get real. And you've seen glimpses of it, right? But nothing that has been consistent or persistent. Okay, we're going to start to enter into a phase where every day you see they're going to come in here and start buying puts. Why? Because, you know, as I said earlier, everything works until it doesn't. And when it doesn't, you see trade roll and do the exact opposite. That's what that really means, is when I say, it works until it doesn't. Okay, it works. When I say it works, like dispersion works until it flips over. Okay, and then the trading firms will actually go after the exact opposite, which is often going to be met with extreme volatility expressly inside of the S&Ps. Oh, that's good stuff. Okay. My kids, they finished all the milk. I only use like a splash of milk in my coffee, and they finished all the milk in the house, except I found chocolate milk. So I put some chocolate milk. Okay. It's like prefabricated chocolate milk. Put chocolate milk in my coffee this morning. God damn, is that good? That coffee is good. I'm losing my voice over everything now too. Allergies are so bad here in Arizona. Used to move to Arizona because you had bad allergies. Now you got to get out of Arizona because the damn allergies are so bad, especially from California. You don't come if you're from California. You're not invited. S&Ps are getting smoked right now. Specifically, it's all coming from NASDAQ. The last 3 minutes of trade might, that is huge volume. That's a capitulation type volume. So relax. We're just going to let this kind of, as I say, let it play. Everything works, okay, until it starts to flip over on you. And we are seeing Nvidia on a percentage basis just lost 1% in the last 4 minutes. So it just has to do that for the next 100 minutes and we're home. 1% a minute for the next 100 minutes. It's okay. It's okay. All right. Do not be alarmed now. This this kind of trade, look at the amount of shares that are trading through here. All right. Let's say it's an average of 250,000 shares. You have 250,000 shares of an $880 stock. That's why I say, like you got people that are like on CNBC, mom and pop are home buying this. Really? Really? Are they really buying 250,000? We're clear up to 300,000 shares a minute have traded consecutively for the last, almost 5 minutes? Okay. This is about as extreme as an environment as you could possibly get. Everybody in the trading world, their guns are firing right in here. Okay. Let the marketplace, and I say this also a lot, let this marketplace open up. Okay. Opening up simply means it's got to have two-sided markets. And I literally just got done telling you the S&Ps, almost every recent week, we've seen one day of fairly extreme volatility to the downside. This could be your day. Again, the S&P is being down 14 is nominal. What is interesting is the amount of size that's trading in this marketplace right now. Okay. This is huge by huge. When you're doing over 10,000 contracts a minute, and I'm not going to, sugarcoat this, that's everybody in every trading desk standing up and firing everything they have. Okay. Everything they have is going into this marketplace right now. Okay. And then some. If this ain't capitulation, okay, it is the beginning of one of the more precipitous drops you're ever going to see. You better hope right now, for those of you that have long positions on, you better hope that that was a capitulation bar, because the volume we just did clear up right now to 18,500 plus contracts. Look, okay, it is the extreme all of a sudden out of nowhere in the last 5 minutes of trade. That's some of the most extreme volume you're going to see in a marketplace during a trading session. Just to give you an idea, look, the cash open only did about 12,000 contracts. It's traded 18,000. As I say, that should be, okay, if this is not capitulation, this market bottom just drops out. Okay, the NASDAQ flipped over by 100 handles, okay, in the last 6 minutes now. So we are seeing, again, there's more selling coming right now. Volatility starting to pick up a little bit. Like, look, don't look at the VIX and go, oh, it's crazy. Okay, volatility futures, in fact, I want to get a better feel. They're just flat right now. The volatility futures are not playing a more significant role. Watch vol futures carefully here. And the reason being, if the vol futures really start to take off, they're up like 40, 50 cents. Okay, the selling will get that much more extreme. So very, very fast move in markets. Remember, we have a $30 expected move. And again, now it's actually coming into play where it's $30 expected move. Look, there's still, though, rotations and heavy rotations in play. Let's go over to the advanced decline line briefly. Okay, that's closest we've been to correlation now to the downside in quite some time. So, that exactly the logic I was talking about 20 minutes ago, it works. Okay, 50-50 works, keeps the market propped up till it doesn't, and all of a sudden things start to flip on their head. The volatility is going to really catch my attention, though. It's not at this point. As I said moments ago, if that isn't capitulation, you're in trouble here. And looks like we're going to make another break for the downside. So 52.11. Okay, the next, obviously, the next major level is going to be 5,200 in here, and then some. Nvidia has mellowed out a little bit, but at the same time, I'm saying that Meta took quite the hit. Microsoft, though, I mean, for what it's worth, this thing's still up some $6. Okay, one scary aspect for today's trading session, very scary aspect in today's trading session, is on Microsoft. This could be really opportunistic. Cool. Somebody actually, Dimitri just hit that, right? If markets are going to continue to the downside, Microsoft provides an incredibly viable risk reward on an intraday basis. This is something that, look, you got to put some risk into this. There's no question about it. But with the day left in here, I'm filled. Okay, I'm just going to go buy a 422.50 put. Again, I'm buying a 422.50 put. I'll explain this here momentarily. Let's copy it and paste it down below. Okay, my exact fill was 313 in here. Just bear with me for a second as the marketplace stabilizes in here. And again, this is not going to be a wildly price specific trade. Okay, all right, this is an intraday put purchase, do not hold. Okay, it's an intraday put purchase for like 313. And again, I'm not going to be like wildly price specific, and I'm going to tell you exactly why. There's so much crossfire and so much volatility going on right now that there's times where just getting executed when the S&Ps are bouncing around like this is more important than me trying to get necessarily like, executed at a spectacular price. As you see, this thing was just 280 a minute ago and jumped right back to 315. If they even smell a down move, they're going to come after you in here. Okay. The reason I actually put the Microsoft trade on is I'm talking about this rotation that's been pretty consistent. We're rotating, for instance, out of Nvidia into, for instance, Microsoft. And that's exactly what you're seeing today. But okay, if you look at the S&Ps and they start selling off and things mellowed out for like a moment, and that's fine. Okay. But as we start to kind of mellow out a little bit, if there's another bout of sell side activity, which very likely that we test into even 5,200, okay, what eventually can happen today is they'll start to come for Microsoft. Okay, either way you want to put this, Microsoft has a very viable risk reward ratio. Like Microsoft's already up $7. Okay, is Microsoft, let's cruise back over to Microsoft for a second. Is Microsoft even positioned to move $7? And ironically, you see like Microsoft, it's only positioned to move like $6. It's way outside of an expected move already. Moreover, if you take a look at auto expected moves, this thing is shattering to the upside. So if today we see continued sell side activity, okay, there's a very high probability that at some point Microsoft gets sucked down into it. One of the things though, when I say, I don't worry too much about price in here, if you sit there, okay, and start to like, and fret and try to get the perfect entry, look, if Microsoft's going to break to the downside, okay, it is what it is. You have no, knowledge or bearing on when it is going to break to the downside. And let the market kind of play out. Right now, I put $3.20 at risk, and this thing's going to move around a ton. Be worth $2, it'll be worth $6. Okay, it's going to be all over the place throughout the course of the day. This is some of the fastest moving options you've seen in a long time. Okay, let it play out a little bit on an intraday basis. But in a trade like this, okay, you have risk reward in the stock price on your side. I mean, things are already up $8 today, which is phenomenal, right? But at the exact same time, okay, if you look at the trade from where it is right now, okay, if you're wrong, you're going to lose, let's say you're wrong by $2.50 or even $5, okay? Your $2.77 becomes worth basically $1. And that, and again, I'm using the current prices on the screen. In one case, you lose about what, $1.70. But if you're right and it moves like, favorably, there is no 250 strike in here, but if it moves favorably, okay, there's an easy shot to be able to make between, $6, even $7 on this trade. So you have about $1.70 at risk, okay? And that's if the stock went up another $5. That would be all kinds of crazy. Okay, if it reverts back to basically unchanged, your $2.60 option would be worth almost $8. Okay, there's a really, really viable risk reward on that one. Speaking of viable risk reward, look at the financials in the last couple of minutes. They're at the forefront of this. Not too much action out of Wells. Okay, I saw somebody mentioning Wells. They have 14 days left. We're right on the dance floor in here. We'll be okay there. I'm a little surprised to see, again, stuff that's already beaten down, okay? It's getting beaten down further. Really an unusual, like, look, Tesla, I was looking for a bullish trade eventually in here. The market it keeps beating down the already beaten down stocks. Apple doesn't seem to be able to catch a bid for its life. It's up 1% right now, but again, hold that thought, okay? As today progresses, all right, the trade to look for as today progresses is, okay, the rotation that just all of a sudden ceases to exist. That simply means, it doesn't mean that Nvidia has to get killed. Look, Nvidia is already down 3%. That's not even that big of a move. I keep saying this, like a 5% move in Nvidia, then I'll start watching, because you have to kind of get orientation. Nvidia at this point, like last week, stellar move to the upside and reverted all the way back down pretty much on Friday, right? This week, okay, Nvidia is almost now flat on the week, but we're not even talking about any real damage. Real damage doesn't begin until it starts to break the lower edge of an expected move, which, holy crap, is 823, right? You're talking $60 more to the downside, which would be huge by huge. It would crush the NASDAQ. The trade, though, again, to look for today, sure, it's about Nvidia, but it's Nvidia all of a sudden causing people to throw the towel in everywhere. And that is why I did the Microsoft trade. Plain and simple. As I said, this thing's going to bounce around. It's going to be worth $2. It's going to be worth $6. Let it play. All right. Just sit there, sit on your hands, whatever you got to do. As I said, next stop here is probably somewhere around 5,200. I think we're going to break through there. I think we're actually going to break the lower edge of the expected move. Take a look at the SPX right now. It's SPX on an intraday basis, The expected move is $30. We're almost home there. Speaking of the SPX, okay, holy crap, this is actually a decent sized move, something that just occurred to me. You have triple witching coming tomorrow. First of all, couple last things, and I know that Tony Rago is supposed to come on, so hold on, Rago. I got crap to talk about, man. Okay, I'm going over my time over here, but this is kind of important. There's a few things that are critically important, so can't let you go until I didn't even talk about any of the stocks today. Screw it. Okay, I don't need to talk about like Robinhood, okay, or Dick's Sporting Goods because things just got interesting. One of the things you got to think about tomorrow morning, okay, AM, the opening settlement is some of the biggest, okay, some of the biggest contract size in the SPX ever is coming off. Okay, so I was talking about it in the last night's video, expected volatility to really start to break out. I'm surprised though it hit this early on in the day. It has nothing to do with Nvidia, everything to do with the SPX. But check this out. You realize what that line would mean, okay? You're like, whoa, that means we're unchanged in the week. No, it means it's the most critical amount of gamma risk. If you start a week here, okay, the gamma risk is just freaking massive if you're there 4 days from now. You go, well, why? Okay, because gamma grows. Like in the beginning of a week, gamma looks like this, and gamma grows, and then gamma grows, and all of a sudden, damn, look at that gamma. And that's where we're about to be. And it's all at the money. That would be at the money right there. Okay, and right there is what? Approximately 52, 51, sorry, 25-ish, 51.25, right in that neighborhood is would be the maximum amount of gamma risk, and we are so close to it. So the danger over here is you start rolling down the hill, and if you understand gamma risk works like this. Okay, this would be up the hill, this would be down the hill, but as soon as you start rolling down the hill, everybody has to actually hedge in that direction. The same is true to the upside. Okay, but you start seeing some sell side activity, you got to be concerned because gamma is going to be big, bad, and ugly. And the biggest amount of gamma would be right here on your screen. So you come into, a Thursday afternoon. If we're anywhere near that 5120 and the SPX, forget the S&Ps for a second, the SPX 5120, that's the most incredible and dangerous area coming into a triple witching that we've seen in years. Because the triple witching, as I was explaining on last night's video, look at this crap. These 5150s, which were, by the way, they were in the money. Okay, there's over $35 billion, I think I calculated, of notional value risk just at that strike. $35 billion just at that strike. That is sick amounts of money, because if you do 72,000 contracts here, 65, it's like 135,000 contracts, 135,000 contracts times 100, because what? Contract multiplier is 100 times a $5,144 stock. It's about $35 billion of risk in there. It's an absolutely egregious amount. That's just of one strike. It's a multiple $1 trillion expiration. Okay, one other point that is of critical importance. Okay, spiders, spider. Okay, you have to understand that if you have short calls that are in the money, okay, specifically, I do have some 486s, but my 486s are 139 days out. Okay, the reason I'm bringing this to your attention, spiders are going, okay, to have a dividend. Now, all you have to do is kind of look like I'm short 10 of those. I look at the corresponding put. As long as the dividend is significantly less than the corresponding put, it's called put call parity, you're probably going to be okay. So meaning that there's still a lot of time value in my 486s. But here's a warning to you. If you have a short duration, listen carefully, a short duration, okay, short call, short duration, short call. Say it again, short duration, short call. What's short duration? Okay. Oh, even a month out, fairly short duration. But if you have a short duration, short call, that's a call that you sold. And that call is in the money. The dividend's coming. You don't know exactly how much the dividend's going to be, but it's probably about $2. Because if I look right now, okay, for tomorrow's expiration at what we term, okay, put call parity, right? You can see that the puts are trading for significantly more than the calls. How much more? Well, in this case, the at the money right here, these are the at the monies. There's $1 more premium, but it's a 50 delta, which means the dividend's right around $2. Okay. I know that gets crazy. I know I just said it in like 2 seconds. Just be careful. If you're short a call with like 1 day left, okay, get the hell out of there. Get out of there, rock, because you're going to get hit with that dividend. All right. I'm going to leave, okay, the Microsoft trade alone for right now. I see, as I just said a second ago, 4 minutes ago, you were up. Okay. Now you're like, I'm down. I'm so up that I'm down. Like, let it play a little bit. This is a trade that's, look, it took us a long time to get up here. It's going to take a long time to resolve. It's more of a matter of, yeah, Nvidia has to start to see some sell side activity, but it's more or less, you got to stop trying to shove capital where capital don't belong. So I am going to turn it over to Tony. I got through most of the dividend roll, the dividends were critical in terms of the S&P futures. Look, I've got S&P futures contracts down here, micro contracts and so forth. You got to roll this stuff. Okay, roll them, roll them, roll them. Don't get caught in any dividends out there. That's it. I got to turn it over to Tony Rego. Thanks everybody for tuning in. Look, I'll come back on later today if things get all kinds of crazy. Okay, I like crazy days. Here's one thing that is notable. Okay, the volatility, it is continuing to kind of creep up in the backdrop. As I said to you, if it's up about like 40, 35, 40 cents, it's damn close to that right now. So volatility seems to be like a little bit of a delayed fuse in here. But if that keeps coming up, they're going to go for another round of sell side activity in the S&Ps. We moderated a little bit. Okay, we really called this one. If that wasn't capitulation, we're in trouble, and that's exactly where we're trading right now. Okay, look where we're trading, exactly where that huge volume bar hit. Be careful here, because this is where volume kind of subsides and roll right back over and start to go into a little bit of a tirade. Stay tuned. Tony Rego is coming on right now.